Hello, everyone, and welcome to a new edition of Merrill's Monday Morning Market Madness. Just coming at you today with an update regarding the housing market in the Phoenix metro area. Today, we're going to take a look at the average prices in Phoenix and what they have been doing over the past couple of months to year, and talking about rising interest rates and how we think that might affect the market moving forward, and just a little bit of projections, a little bit of a look ahead, and what we expect to see in the coming months. So, as always, I like to start with a look at our current stats. So right now, active in our entire MLS, there are 4,844 listings, which is pretty similar to where we have been for the past couple of weeks. There are 12,231 listings that are pending or under contract, and there are 8,998 homes that have closed in the past 30 days. So we take, gives us an absorption rate number. If we take the number of active listings divided by how many homes are selling every 30 days, it gives us an idea of, no new homes were to come on the market, how long would it take before everything is sold? And right now we're at a 0.54 month supply of inventory. In other words, if no new homes were to come on the market at the current pace, which homes are selling, everything would be gone in 2 weeks. A balanced market would have a month supply of inventory of somewhere around 4 or 5 months. And so we still are dealing with a very, very severe supply and demand problem, where the demand is actually normal. We're selling about the same number of homes that we sell every February and every March. Like the total number of homes selling at a given month is about what we've been seeing over the last several years. In fact, slightly lower in many cases than what sold this same time last year. So the total number of homes selling the demand is relatively normal. The issue is that, and you're probably sick of hearing this, but the issue is that there's just not a lot of options. There's not a lot of stale inventory, meaning there's of the homes that are on the market, buyers don't have a lot of options. So if you're a buyer and you're looking for a home right now, oftentimes there's 7 or 8 other buyers who are competing on the same property just because there's not a lot available. So I wanted to look at average prices for single family homes just in Maricopa and Pinal County, because sometimes our MLS does get homes listed in there that are in all over Arizona. So I narrowed it down to look at, let's just look at single family homes, because I sell condos here and there, but I mostly deal with single family homes. And so I think most of my audience is probably single family home owners or buyers considering single family homes. So if we look at single family homes in Maricopa and Pinal County, last year, this same time last year, the average price for those single family homes was $520,083. Okay. Well, by December of 2021, the average price of those homes had reached $579,783. In other words, from March of 2021 to December of 2021, average prices increased over that 6-7 month period. Average prices had increased by about $60,000. Well, by January, that same thing was 600,000. By February, it was 620, and so far in March, the average price for single family homes in Maricopa and Pinal County is $639,358. In other words, since December, so just from December 1st through December 31st, again, the average price was $579. And then so far in March, $639,358. So in a 3-month span, we've seen the average prices increase for single family homes by about $60,000. In other words, average homeowners are gaining, $15,000 to $20,000 a month in equity in their properties right now, every single month. It's absolutely bananas. And the crazy part about that is that that it's going to continue to rise. There is again, so little inventory, multiple offers on everything, buyers paying way above list price on many properties, waiving the appraisal contingencies, and just kind of some craziness going on out there right now. Now, the biggest argument, I suppose, against why, a lot of people are kind of waiting for the market to settle down and for values to drop. And one of the main things that people keep pointing to as to, oh my gosh, this is definitely going to cause a slowdown in the market, is interest rates. And I'm going to share my screen here with you really quick and show you a slide here. This is Freddie Mac has a website that publishes average rates. And this blue line is the one I want you to particularly pay attention to. This is the blue line is a 1-year history of what average mortgage rates have done over the past year. Sorry, I kind of said that twice. So as you can see, since Christmas, average rates have increased by over 1% from December till today, well, March 17th. So 4 days ago, average rates are now at 4.16% for 30-year fixed rate mortgages. And that is a pretty steep incline over just a 3 or 4 month period. But again, we're still seeing over that time period, we're still seeing average prices have increased by, despite those rising prices, despite those rising rates, average prices have still increased by $60,000 over that period of time. And I think there's a couple of big reasons for that. Number one, supply. There's not a lot of options, and buyers who have to move don't have a choice. They've got to buy something, and there's not a lot of options out there for them. And when they do find something they like, they're having to pay way over list price because of the level of competition on these homes. But the other factor is, and this is something that I don't think a lot of people consider, rising rates is actually going to hurt our supply, because let's just say that you are in a home currently and you've got a 3% rate or a 2.875% rate, and you would really maybe like to move. You maybe get something bigger or something smaller, but you don't want to buy a new house at 4 point something percent. So you might just decide you're going to stick it out and stay. You're not going to move because you don't want to lose your 2 point something percent mortgage. So we're actually going to see fewer homes going on the market because a lot of people are not going to want to let go of those incredible mortgages that they have. That's just a thought. And one thing that we're seeing right now that's really interesting. Average rents in the Phoenix area increased by 21% in the year 2021. But so far this year, they seem to have stabilized. Average rents are not skyrocketing like they were, partially because we had so many investors and hedge funds coming in buying up properties. We're seeing a huge increase in available properties to rent, particularly single family homes. Apartments and townhomes are still really, really tight and not seeing a lot of growth. I know that seems crazy. You see apartments being built everywhere, but the number of apartments available to rent at a given time has not really increased. The number of single family homes available to rent is increasing, and that's giving renters more options, and that's causing rents to stabilize. And so prices are still skyrocketing, but rents are not. There may be more people who choose to rent because on the short term, it seems like it might be more affordable to rent. But the thing is that I like to tell everyone, if we go back to that mortgage slide, renting a home is like having, the best part about buying a home, even if it feels really expensive right now, is that you get to lock in that mortgage for the next 30 years. So whatever that payment is today, 30 years from now, that's going to feel like a really inexpensive payment because of inflation, right? If you could go back 30 years ago and buy a house in the Phoenix area for whatever the average price was 30 years ago, $120,000 or something like that, that payment, even at a higher interest rate, is going to feel really affordable in today's money for that kind of a property. And when you rent, you're basically, it's almost like buying a house with an adjustable rate mortgage that adjusts every single year, and it's almost guaranteed to go up every single year. So even if buying a home feels expensive, it's still way better than renting because you get to lock in that payment over the next 30 years versus renting. The payment might feel affordable today, but 3 years from now, after the landlord's raised the rent 3 or 4 times, suddenly it's not going to feel as affordable anymore. So anyway, those are my thoughts for this week. I hope you found this helpful. As I mentioned, supply is still desperately low. We've been seeing average prices increase $15,000 to $20,000 a month for single family homes. I expect that trend will continue throughout the rest of March, April, May, and June. By June, I think just seasonality, that's very normal in our market. By June and July, the market starts to slow down a little bit and values will probably stabilize and stop, skyrocketing. They might still continue to increase. We'll have to see what happens. But historically, the Phoenix area sees its greatest gains, its highest increases in the spring to early summer. And then by the beginning of summer, it just kind of levels out and stays level for the rest of the year and then takes off again in spring of 2023. So we'll see what happens. I don't want to predict that far ahead, but at the moment, despite rates, prices are still climbing at a very rapid pace, and we do expect that to continue. So hope you all have a great week. And if you have any questions, you want to know anything about the value of your home, or more specifically, any stats about what the market's doing in your area, please let me know. I'd be happy to help. Thanks and have a great day.